down the track and to be able to distribute the presentation. Phil will speak for about 40 minutes today, and he'll share his screen and use PowerPoints to do that. And then we'll have 10 or 15 minutes of questions and comments. If you have any questions as you go through the session, please feel free to put them in the chat box, and I'll collate those and ask those of Phil as well. If you could remain on mute for the period of the presentation, that would be fantastic. Phil really needs no introduction in one sense. He's been a long-term contributor to the non-profit world in accounting particularly, and has made many, many strong contributions, of which today, of course, is going to be one. So we've also distributed Phil's brief bio, and so I won't go through that, but I would like to again acknowledge Phil's contribution and say thanks very much for your presentation today in advance of what I know is going to be a very interesting discussion. Phil, I'll hand it over to you, and then we'll get into it. Thank you.
Okay, well, thanks, David. And look, thanks to David and staff at UWA, and also to Miles and staff at ACPNS for getting this series going. I'm really thrilled to be sharing this research. It was definitely a labour of love doing it. It's the reporting entity concept has been under discussion for some time, and the issue of charity reporting is certainly front and centre. Largely, I think, coming from the sector to ensure that best practices being observed, and transparency and accountability are present, and it's in that spirit of undertaking research for the good of our community and the sector in particular, that I've undertaken this research. So I will do a screen share, and I've got a slide presentation. Oops. Okay, so I would just acknowledge my co-author, Chi Chong, who's not here today. Just an overview of what I had in mind. Just to start with the research question. I know there's a few non-accountants present, so a couple of definitions that I think will be handy. I'll briefly look at the justification for the research and the relevant literature, and then spend a little bit more time on how we approach this problem and the results, discussion of the results. And look, I think the last section I have, what's next, I think there's some really good spirit around at the moment to pursue improved and good practice, best practice in financial reporting for charities. So I think there's some, exciting things ahead there. Okay, so the research question is the application of the reporting entity concept uniformly applied by Australian charities, such that it leads to consistency of financial reporting? The reporting entity concept was introduced in Australia in 1990, and it underpins financial reporting in Australia. It's a judgment-based approach rather than a rules-based approach, and it was introduced on the premise that it would lead to consistency of financial reporting. However, as we'll see, there's been a little, some concern that it hasn't, and indeed this study indicates that it has not led to consistency of financial reporting by charities. So I'm just going to go in now to a couple of definitions. What is the definition of the reporting entity? It's an entity in respect of which it's reasonable, and that's an important word, reasonable to expect the existence of users dependent on general purpose financial reports for information that will be useful to them in making and evaluating decisions about the allocation of scarce resources. So it's as I said, it's a principles-based approach to deciding the extent or the fullness of financial reporting. And the SAC1, the statement that introduced the reporting entity concept, posits indicators. And basically, the idea is if one of these indicators is present, it's more likely that the entity will be a reporting entity. So separation of management from membership, separation of management from others with an economic interest in the entity, political or economic importance, and then certain financial characteristics, which were things like size, indebtedness, and with respect to non-profits, the degree of reliance on donations and or government grants. So the requirements for a reporting entity must prepare what's called a general purpose financial report, which is a financial report that's prepared in accordance with all the accounting standards. If the entity is a non-reporting entity, it can choose to prepare a general purpose financial report, or it can prepare a special purpose financial report. For a special purpose financial report, the accounting policy choices are made by the entity with, of course, the agreement of the auditor who must sign off on the truth and fairness of the accounts. So we've got general purpose financial reports, which apply the suite of accounting standards, and special purpose financial reports that provide apply accounting policies or accounting standards determined by the entity. So that leads to these two definitions, the general purpose and the special purpose financial report. Importantly, I think the definition for the general purpose financial report is that it's a report to meet the needs, common needs of a range of users, whereas a special purpose financial report is intended to provide information for a specific purpose to a limited group. And I think that's where we'll see in a moment how the reporting entity was developed. And it was not developed with charities in mind. I think for the vast majorities of particularly public benefit institutions, their financial reports do almost by definition have a wider user group. So for the preparers, for the entity, they need to ask themselves a question. Is it reasonable, and I've emphasized the word reasonable, is it reasonable to expect that there exists users who are dependent on a general purpose financial report to meet their information needs? So is it reasonable? And in the study, we identified what we believe were indicators of reasonableness in the expectation of there being users, and correlated that with the reporting status. So if the answer to that question is yes, the entity will self-classify as a reporting entity and prepare a general purpose financial report. If the answer is no, they can choose to prepare either a special or a general purpose financial report. So that's just a few definitions. As I said, I think there was a few non-accountants here, and accounting at its worst is convoluted. At its best, it's a bit awkward in terms of some of the language that's used, but that's just the way it is. So what's the justification? Well, with the, as I said, the reporting entity concept has been the basis of Australian generally accepted accounting practices since 1990, but with the ACNC Act coming in 2012, there is a requirement for charities that must report, so that's large and medium-sized charities, to determine if they are going to prepare a reporting entity. Are they going to prepare special or general purpose financial reports? Now, as I said a moment ago, the reporting entity concept was developed as a panacea to the problems faced by small and closely held for-profit entities. So a few years ago, I visited the AASB offices to go through the responses to the exposure draft that they issued in 1989 in preparation for the SEC 1, or the reporting entity concept, and looked through, and they were, I haven't got the figures in front of me, something like 130 responses, 114 of which were dealing with the issues faced by small, and I really mean small, private companies who closely held, often people, managers, owners working in the business, and they were concerned about what this issue was called of standard overload. And there were 5 responses that mentioned but said nothing about not-for-profits. They just said, will this apply to not-for-profits? So I do think, and I think most people would agree, that charity financial reporting, the accountability, the stakeholder relationships are quite different to closely held for-profit entities. The other justification, the rules versus principles-based standards, it's not settled. Australia, we have as I mentioned, a principles-based approach where we apply a lot of judgment. In some other jurisdictions, there are what people call bright line or rules-based approaches, which say, well, if you are this type of entity or this size, you must prepare financial reports in this way. There's concern in the literature, the academic literature, not a lot of literature on it, but still unanimous in that the reporting entity hasn't really worked well. There's concern from the standard setters and from the regulator of companies, ASIC, and also from in some of the professional literature, that is literature in the professional accounting journals, which has questioned the usefulness of the reporting entity concept. And of course, we can look overseas, particularly to the UK and to New Zealand, and we find that there is regulator-based reporting requirements for charities. So there is certainly a strong justification for asking the question about the reporting entity concept. The literature really reflects what I've just said. So I won't say any more about the literature. It's in the paper, but there are unique features, mainly to do with the governance and stakeholder relationships of charities. As I said, the development of the reporting entity concept, it's shown quite clearly, was not, didn't have the charities in mind. The principles versus rules debate is really unsettled. There's studies saying that one works well, the other doesn't, and vice versa. And then those studies on the efficacy of the reporting entity concept. I'd like now to discuss the methodology. I'll give a brief overview and then discuss the population, how we analysed variance, a couple of matters on research design, which I think are important, and hopefully I think that you'll find them interesting. That is, these are questions of how does one relate or operationalize these concepts in the reporting entity concept. So for example, how do you determine if there's separation between management and membership? What are the indicators available for a charity to determine if there is separation of management from those with an economic interest? Because those are questions, as I said, the preparers have to ask that question. Are we a reporting entity? Are there indicators present which makes it, suggests, I should say, that it's reasonable for us to expect the existence of users of our financial statements who can't command a special report? And on top of the empirical study, which this paper really is about, we did what I've called a subsequent analysis. We just looked at some of the indicators because we found that there was inconsistent reporting, it just raised a few questions, at that time about reporting quality. So in the data, was there anything we had about reporting quality and the decisions that are made by preparers? I think I'll return to that at the end of the presentation. I do think that is an area for further research. But just to go through briefly the overall methodology, quite simple. Take a random sample of large charities, classify each according to the indicators. That is there separation of management from membership? Does it have political or economic importance, and so on? So classify each one of those, and then ascertain its reporting status. So we can do that by looking at note 1 to the accounts, where it is stated, correlate A and B, and analyze that variance. So the independent variable is the indicators in SAC 1, and the dependent variable is the reporting status that the entity chose. Are they a reporting entity or not? Do they prepare general purpose or special purpose? And as I said, there's that last add-on, which was the analysis of reporting quality. So the population was charities that lodged financial reports with the ACNC in 2014. So that was all registered large charities. So that's charities with total income greater than or equal to $1 million, except for providers of school education, because they were subject to some transitional, if you like, transitional exemption from lodging the reports. Basic religious charities, which of course are not required to furnish financial statements to the ACNC, and those charities which are required for a range of reasons to prepare general purpose financial statements. Some of those were entities for social housing, for example, which the funders required, and there were some others that for a number of different reasons. So we had to exclude those because we were looking at what people chose to do. So the 10%, we chose 10% of the large charities as the sample, so that gave us a sample size of 574. Now, a very important question, why 2014? And the reason for that is that I wanted to look at the influence of AGAP. That is the Australian Generally Accepted Accounting Principles on Charity Financial Reporting, not the influence of the ACNC Act. So there were transitional arrangements in place for the first few years. The ACNC came in the end of 2012, and it allowed for a few years for charities to report as they had done to their state or territory regulator for the first few years. So that was really important because we really wanted to see what the influence of AGAP is. Now, I'm very confident that our sample reflects this, in that 81% of the charities, those that prepared special purpose financial reports, because the ACNC Act, I should just digress for a second, has a requirement that if you are preparing a special purpose financial report, you must comply with a set of standards, a particular set of standards that are named in the Act or the regulations. And of course, if you were a charity that was making use of the transitional arrangements, you didn't actually have to do that. So we wanted to know, are we looking at the application of AGAP or the influence of the ACNC Act? And as I said, I'm very confident that we were looking at charities that reported as they had done. So we had to then classify the charities according to the SAC 1 indicators. So they are, as I mentioned, is there a separation of management from membership? Is there a separation of management from others with an economic interest in the entity? Does the entity have political or economic importance? And does the entity meet particular financial characteristics? So I just want to spend a few minutes now saying, talk about how we, operationalize this. So we said, with respect to the question, is there separation of management from membership? Because if the answer to that question is yes, it suggests under SAC 1 that the entity is a reporting entity and it must prepare general purpose financial reports. So we said, is the charity a member-based and the governance document does not provide members with the right to inspect the accounts of the entity? If that's the case, we said there's separation. Because members of those charities are therefore reliant only on the annual financial report for information about which to make decisions. For some charities, there was, and a reasonable proportion of charities, the figures, I'll show you the figures in a moment, member-based charities did allow access, which meant that, in the Constitution, it said something like, within office hours, any member can inspect the books of the organisation. So for those charities, they, on this indicator alone, we would say, well, they're not reporting entities because the members are not separated. The members can have access to the accounts. The second indicator of reporting entity status is there separation of management from others with an economic interest in the entity. So we looked here at 3 separate indicators, and then also we combined, if you like, those indicators. So did another analysis on if any one of these indicators. Possibly I haven't mentioned this, one of the fundamental principles on which the reporting entity is based is that only one, it's not a question of meeting 2, 3, most of, or whatever the indicators. If any one of the indicators is present, that is on what the decision of about whether or not it's a reporting entity should be based. So we said if the charity's governance document contained an explicit requirement to raise funds from the public. So for those charities, they would have in their governance document, a clause to the effect that the entity will establish a fund and certain rules about that. The second indicator was, is a charity licensed to raise funds under the Charitable Fundraising Act in New South Wales? Now, that act is different to other acts. Well, it was when we did the study a couple of years ago, in that that act requires that any licensed fundraiser must provide to a member of the public their financial report if they've been requested. So we said, well, if that's the case, any charity that is so licensed must believe, or probably would believe, that it's reasonable that someone might ask, an external party might ask to see their financial reports, in which case it would meet the criteria for being a reporting entity. And the third one was, does the charity have deductible gift recipient status? So again, I think if a charity has deductible gift recipient status, it's reasonable that external parties, members of the public in particular, the media as well, may wish to view the financial statements. One, because they would like to know where their donation or how their donation is being used. And secondly, the issue of DGR status is a significant policy matter. Tax expenditure is one way in which governments have increasingly shown or provided support to different parts of the economy by foregoing. So if an organisation has a DGR status, the federal government foregoes the tax refund that is given to the donor. So it foregoes that into consolidated revenue. So that is a significant policy decision that is made, and therefore, being a significant policy decision, I think it's reasonable that people might like to know, well, how is this money being spent? Political or economic importance. To determine political or economic importance, we said, well, if it's a peak body, or in its constitution it has a standalone objective of public representation, or it's involved in campaigning, we'd say, well, it's got political importance, and therefore on that basis would be a reporting entity. The issue of, or the criterion of economic importance was probably the most difficult one, because to operationalize, because in a sense, I think using the word economic as the accounting conceptual framework, as AGAP does, they apply if you like, a broad welfare based definition of economic when it comes to accounting by not-for-profits. They've adopted that. All charities, in a sense, or the vast majority, would have economic importance, even if they're very small. If it's a small charity in a country area, it is very significant to the economic, or to the welfare, and in that broader sense, economic welfare of the community. It wasn't possible to drill down into the data to get that sort of information. So what we said was, if the total income is greater than or equal to the median for the main activity category. So most people would know the ACNC in the annual information statements, charities identify a main activity. So that might be provision of childcare, it might be emergency relief, or whatever. We looked at the median income for that charity, and we said, well, if our charity has a total income greater than that, we will say it's got economic importance. The financial characteristics, the SAC1 says, now, they say these are the indicators to be considered, that there isn't a bright line or a hard rule. So total income, level of indebtedness, so we used the total liabilities, which of course for charities, and we tested this, and I think the annual charities reports show this, that the overwhelming liability item for the majority of charities, of course, is the employee liabilities. That is financial liabilities to employees. Then the SAC1 also says another indicator for not-for-profits is the amount of resources provided by government and or other parties. So we looked at the government grants, proportion of income from government grants, and then the proportion of income from donations, bequests, fundraising, and sponsorships. So that's other parties in the community. So these were the indicators in SAC1 paragraph 22. Okay, so that's how we operationalize the research question. So now, just like to have a look at some of the results. So I've got a number of tables. First of all, the distribution of reporting status for the full sample, then by legal form. And then for each of the non-financial indicators from SAC1, so those were those indicators such as separation of management from membership, political and economic importance, and so on. Then the distribution reporting status according to the financial indicators, so that they're all univariate analysis. And then we performed a regression analysis where we brought together as independent variables the above mentioned variables or indicators. And the last thing to look at is this, as I mentioned earlier, the subsequent analysis that we did. So really that is largely anecdotal, but nonetheless instructive evidence. So as you can see, for the full sample, so I've got here, just for convenience, we did an analysis of the full sample and then 5 legal forms, or full legal forms and other category. The overwhelming majority of charities were either limited by guarantee companies or incorporated associations. So I've got those. So the full sample, the majority of charities, as you can see, 53% are determined they're not reporting entities, they're preparing special purpose financial reports. However, when you look at the companies limited by guarantee, you can see that the overwhelming majority, 71% of those, prepared general purpose financial report. And it's almost a mirror image for incorporated associations, with 72% preparing special purpose and only 28% preparing general purpose financial statements. The other legal forms, they're not high numbers, as you can see. There are only 39 trusts in the sample, 27 other incorporated entities, and 4 other incorporated entities. The only comment I would make here is that for trusts, the majority were special purpose financial reports, and that may be that is a satisfactory or an appropriate, I should say, an appropriate outcome for trusts, especially if they're testamentary trusts, I think, where really there's a corpus which is being the income from which is being distributed each year to for a charitable purpose. We're not talking about donations and membership, that sort of thing. So just going now to the first of those indicators, so of SAC1. Is there separation of management from membership? So where we found there to be separation, 241 of the member-based charities, so approximately on those figures saying 406 were what we would call member-based charities by looking at the constitutions. Pretty even, 131 general purpose, 110 special purpose. Where on the bottom panel, the charities where there was no separation, there were more, 103 to 62 special purpose. So it's the top panel which I think deserves a bit of attention, and that is, really where there is a separation of management from membership. There isn't you would expect, I think, if the reporting entity concept was working well, that the overwhelming majority there would be general purpose financial reports. For the separation of management from membership, there were 3, if you recall. 3, I've just called them here, A, B, and C. 3, so for those that had the objective of raising funds from the public, there were 134 that had that objective. 440 did not. So of those 134, 80 prepared general purpose financial reports and 54 special purpose financial reports. For those entities that had an obligation to provide their financial reports to the public under the Charitable Fundraising Act New South Wales, certainly a majority there, So 90 of the 133 that were registered under the that Act, 90 prepared general purpose and 43 special purpose. The probably this was one of the results that was the most, for me personally, startling. So for charities that had DGR status, so we said if they've got DGR status, that indicates there's a separation of management from others with an economic interest. There were 429. So, you know, a slim minority. 211 prepared general purpose financial reports and 218 special purpose. So more than half prepared only special purpose financial reports, when indeed they were donors to the charities were receiving a tax reduction, and the Commonwealth was foregoing revenue. This panel, separation of management from membership D, that is where we brute at least one of the indicators, A, B, or C above. So at least one of those indicators was present, and there were 457. And as you can see, it's as close as you can with an odd number to get a 50-50 split. 229 prepared general purpose and 228 special purpose. So again, just looking back at the requirements of SAC 1, only one indicator has to be satisfied, but if our proxies are any good, it suggests that there is inconsistency of reporting. The financial indicators, what we did here with the financial indicators, so we've got total income, so we used the log of total income because the data was a bit skewed. So so this is the we looked at the size of the total income, charities that were preparing general purpose, and the size of those that were preparing a special purpose. And we can see that there's not a huge difference there at all. Indebtedness, so we looked at total liabilities to total income, and again, there is a small proportion, or a larger proportion preparing general purpose than special purpose. Donations to and sponsorships to total income, so those that had a greater proportion of their total income from donations and sponsorships were more likely to prepare general purpose financial statements. And one that surprised me, maybe I'm not sure whether I should be, I'd be interested to know from discussion later, the proportion of, when we looked at the proportion of government grants to total income, those were the mean proportion that prepared general purpose financial reports was much higher. So it suggested that government grants is a driver of reporting status. My thoughts were to begin with that it was the opposite, that because governments can and do demand very specific acquittals, you know, that fact that there is a government grant doesn't necessarily have to be a driver of reporting status, because the information is given in a special purpose report to government. Whereas for charities that rely on donations from the public, they would have a greater reason for full transparent reporting, because they would like to, you know, be seen to be open and transparent and therefore worthy of a donation. But that wasn't the case with the results. So when we looked at a combination of the non-financial and the financial indicators, and we said, is there one of those present? Of the sample, 555 had at least one either financial or non-financial indicator present. And as you could see, the majority, 52 to 47, a majority prepared special purpose financial reports. So that is certainly counter to I think the logic on which the reporting entity concept is based. We then performed a regression analysis, combining in a multivariate analysis all those indicators that we've just discussed in the univariate analysis, and the results of those were, I think the last line is probably the most important indicator here. The overall result showed no economic significance, that the McFadden squared value was 8%. So we could really only explain 8% of the reporting choices using the indicators that we had operationalized. There were some statistically significant indicators, and certainly legal form, although that result was largely driven by companies limited by guarantee, that the prevalence there of general purpose financial reporting. This result, I think, really, given we'd worked through the univariate analysis, well, I thought it still might be a little bit high, but it's a pretty low explanatory power there. So what does this mean? Well, our research, really there's only one broad-scale empirical study of that's been published on the reporting entity concept. That was by Carey et al. In Abacus a few years back. They looked not at charities, they looked at companies. Some of them were charities because they had a section companies limited by guarantee. So some, I would suspect there's some charities in there. They're certainly not for profits, not necessarily charities. And then there was the paper by Bob Walker, 2004, I think, also in Abacus, which was more of a case study, 4 or 5 cases that questioned the consistency of reporting. So it supports that previous research and shows really overall there's no evidence of consistency of reporting. So that raises a question, is there a need for a rules-based framework? The results with respect to companies limited by guarantee, because of the nature of many of those charities and also the constitution of trusts, that they weren't preparing a general purpose financial, was that was not surprising. As I mentioned, I personally would have thought that the receipt of donations rather than government grants would be an indicator. And then the anecdotal evidence from the subsequent analysis, which I'm going to look at now, gives I think an indicator of some further research. So sure, I'm nearly there. Thanks, David. Thank you. Thank you. So we had 57 charities that categorically stated that they had there were no users. So the category stated there were no users. But as you can see, half of them had a separation of management from membership, 19% had raised money from the public, and 68% had DGR status. Of those, 22% did disclose, even though they did disclose their full reports. The reporting entity concept requires, or the bar is only that it's reasonable. So only, we can say 5.2% of charities properly applied the criteria. Well over half did not give a reason as to why they were a reporting entity. Oh, sorry, not a reporting entity, I should say. There were certainly some odd instances of reporting, completely at odds with the accounting standards, suggesting that special purpose financial reports were, so these are statements from the note 1 to the accounts, which And then another anecdotal evidence, and this was quite surprising, 34% of the audit reports did not meet the requirements of the auditing standards with respect to an audit of a special purpose. So we looked at the special purpose financial reports and found that 34% were not in accordance with the auditing standards, which I think is quite high. So just to finish here, things are moving pretty smartly, I think, from what I read from the AASB. Their work program on this issue is going ahead. There's certainly strong anecdotal evidence in greater interest in charity financial reporting. And then I think there's opportunities for, comparing reports by charities and then looking at who actually makes those decisions. So I shall leave it there and say thank you. Thank you once again to the organisers, and thank you for those that have logged on today. And I've got my email address there. Any further discussion I would really welcome. So I shall stop the screen share now and hand back over to David.
Thank you very much, Phil, for a comprehensive and really interesting paper. There have been a number of questions put through the chat, so we might start there just in the interest of those people that have got in early. Yep. And I'll start with the first one from Kit Scott, who's put a couple of questions there. One is, Kit's curious if there's a reporting entity concept measuring tool that measures equity, equality and well-being from a social impact perspective in Australian charities rather than financial. And I guess the answer to that's pretty straightforward, but I'm just wondering, Phil, if you've got any comments on that as well.
Well, the answer is, I think you would say, is that no, there isn't. And the only thing I would add to that is that the Accounting Standards Board has on its work program, and you can see this on their website, non-financial indicators. They have done quite a lot of work a few years ago. It's got put on the back burner for a while, but my understanding is that they're going to be paying a bit more attention to non-financial indicators. Such as the measure that was just mentioned. There are, of course, I mean, I think that's terrific, and there's plenty of examples overseas. Canada is a leader in this field. There are some genuine issues, I think, for charities, given that there's a requirement for audit. I'm not being a naysayer here, but there are some issues about auditing those. If they're going to be audited, well, it does raise some issues of cost mainly, but yeah.
That's interesting. And then Kit put in a supplementary question that sort of builds on that, which is in relation to the ACNC focus on financial reporting as opposed to reporting on more issues of impact and well-being and so on. And again, I'm just wondering if you've got any further comments on that, Phil.
Sorry, I didn't quite understand. You mean the
ACNC regulations are really financial regulations, reporting regulations are obviously very focused on financial reports. I guess the governance standards might be one element that you might speak to there.
I was just about to say that the governance standards, most people have said about the governance standards that they are very general, and I've said, probably, without being critical, reasonably low bar of expectation, especially when you compare it to, for example, the UK. But there are requirements there to report. And of course, there are some requirements in the annual information statement, but there are more requirements about what activities are undertaken and are you a fundraiser and that sort of thing, where the location. So they're not really, as far as I understand, there isn't much being collated at the moment by the ACNC on any indicators of quality or performance.
And Minji asks what I think is probably a fundamental question, certainly one, Phil, that you and I have talked about a lot, as have others in the room, so to speak, and that relates to whether there's a need to be more, to have more clarity around things like fundamental definitions of economic resource, primary users as they apply to the NFP sector for general purpose reporting purposes, but also when many not-for-profit non-financial assets are often held for service or operational capacity. In other words, the definition of assets and how we consider those organisations, I guess.
Yes, look, I think from a reporting perspective, certainly social housing providers, that they are provided with a data dictionary of what can be classified as a current, non-current liability and different types of asset definitions. So I think we can learn something from there. And certainly there are requirements. Some funders require the standard chart of accounts to be used, but certainly there are some definitional issues that are not being, the accounting standards just simply do not meet, I think, the requirements of not-for-profits, because things like, where there's the charity has an op shop, whether that's being, where the sales there or can be included along with sales where there's a fee for service, for service provision. So there's a lot of room for improvement there. However, just on the other side, the accounting standards do have some accounting standards have made provision for not-for-profits. And for example, the inventory standard, if you like, the golden rule in a commercial setting for inventory is that you value it at the lower of cost and net realizable value. And net realizable value is what you can sell it for in the market minus your costs of selling. The Accounting Standards Board has recognised that not-for-profits and people like Red Cross, St John Ambulance and so on, they hold inventory for either distribution or at no cost or distribution at cost. So they have allowed, or they have brought in a qualification to that rule, which says for not-for-profits that are distributing inventory at no cost or at cost, they can use current replacement costs rather than net realizable value. Similarly, the standard on impairment has a similar provision which recognises that not-for-profits might hold assets for the purpose of providing a service, not for the purpose of generating cash, because the standard in respect of for-profits requires a calculation of the income stream that can be generated from using the asset. So clearly that's not appropriate. So there are a few, they call them AUS paragraphs, the inserts, where the Australian accounting standards have been modified to take into account. I think there could be a lot more of that. There's a few instances, but I think there could be a lot more. And that actually, the fact that they can do that, I think, shows that it's possible without too much, really. I don't think it's too big an ask to make further modifications. Yeah.
I think they're really important, and if I can put my two bobs worth in for what it's worth, Phil, I think the definitional aspect, for instance, between controlled and administered assets. So you might have assets on your balance sheet, but you can't sell them or what have you. You've got significant restrictions. The other one that I think is important and interesting, given its impact on the way we view accounting standards, to me, is the issue of the definition of government grant versus government procurement. And I think that's something too that we have a tendency to think of government procurement as taxpayers' grant money, which has a different perspective or a different implication. So I think that's important as well. Mark Jying has also put forward a question, which I think is an interesting one, and I think I know the answer, but he has heard that many charities, notwithstanding their DGR status, do not seek donations or receive donations.
Look, I don't know. Do not seek donations. Certainly some don't, that's for sure.
Yeah.
In our sample, I think the majority, look, I can't tell you actually off the top of my head that. Certainly the majority had DGR status. I'm certain of that, and the figures I've just put up showed that. Which means they were receiving, they were receiving donations. The issue of charities, I'd have to go back to the figures. Certainly the Australian Charities report I think would probably have something useful in there to say about that. Certainly going to data.gov.org will show anybody, because you can just simply do a little count if and see whether there is an entry in the donations there. My feeling was that the majority do. There are certainly many charities which I think as members of the community don't expect to be charities. Universities are one example. Certainly some trade and employer organisations, or like chambers of commerce and so on. Even the Australian Institute of Company Directors are registered as a charity, I presume, under the provision of education head. So look, I'd have to go back and check that, but I thought the majority were, but I could be wrong.
Fantastic, Phil. We've got time just for one more question. I'm sorry, there's a number coming through, but Phil has shared his email address, and I'm sure he'd be happy to respond to those questions there. And as I said, we'll distribute this video as well so that people can get access to that. But the final question I wanted to pick up was from Glenn Poole. Does this study suggest that decisions about the type of financial statement used are being made by people who do not fully understand the REC, and that for those which are audited, there is a lack of diligence?
The answer to both of those questions is yes. And I really do think that a really useful piece of research would be to ask those who sign off, so it's the chair of the board and the CFO or equivalent will sign off the reports. But I think the anecdotal evidence really does suggest that the answer to those questions is that there is a lack of understanding. Definitely.
Phil, thank you so much for sharing your paper, but also responding to questions and comments. We are at 10 o'clock, so it is time to go. Thank you. Really appreciated it. Thank you very much, everybody, for coming online and sharing this discussion. We will have a further 2 seminars this year, and details will come out over the next couple of days in relation to that. And hopefully we will see you there. Thank you again, and all the very best. Cheers.
Thank you, everybody.